So there are three things we'll discuss with Rakesh Arora. One is the consolidation in the sector which has happened 2-3 years ago. Is that real? How will smaller cement companies exist and coexist? And after 3-4 years of perhaps flat performance by cement stocks, are we in for a good time for cement stocks? So Rakesh, three things. What do you want to start with?
Yeah, Nipin, good morning. So cement industry, I mean, obviously demand is working for them. There's been no doubts about demand, picking up in India given all the infrastructure boom, etc. And it's always the cycles of supply which really matters. Demand has never been questioned. And this is where there's a little bit of an issue because you have two top players gunning for market share, and they are trying to increase capacity quite significantly. And in the last 1 year, if anything to go by that, there's been a lot of competition, and pricing has been subdued. It's not been to the level where it could have been, the way demand has been panning out. So I think we are in a period of good demand with the moderate EBITDA margins. And I think, if you consider 8-9% demand growth, and some of the leaders outperforming the industry by 1.5 times. So we are looking at a 15% CAGR kind of earnings growth for these companies. Valuation is already rich, so that is the kind of return one should expect from cement majors.
Rakesh, but just taking a leaf out of what Mr. Vinayak Chatterjee was flagging off, that 28% GST on cement at a time when, India is growing and the demand is growing manyfold is slightly unreasonable. He anticipates it's going to come down to 12 to 18 odd % or so. What's your thought?
Well, logically, it makes sense, but the reality is that government is unlikely to do that change anytime soon. A lot of revenues earned from cement GST. Also, there is a feeling that the cement industry may not really pass on the benefit of lower GST to the consumer. So that is also one of the other challenges. So while logically it makes sense, meaning I'm not really expecting it to happen anytime soon, at least not in the next 12 months.
Today, we're getting reports of more consolidation as well within the cement industry, news about big players cementing their place. Adani Cement as well, eyeing the acquisition of multiple companies, a sum of a whopping $3 billion as well being looked at. How are you looking at what this could potentially mean for the cement sector as a whole?
So this is, potentially on cards, and this could be the potential driver for, some of the stocks in this year. Adani has pumped in 20,000 crore into Ambuja, and it's very difficult to put in, greenfield projects. So acquisition would be one of the key strategies that Adani's would follow. Not to say that Ultratech will be left behind, so there will be some competition out there. And so we are expecting that there will be further consolidation in the sector. But as I've been mentioning in my previous interview also, don't expect valuations to be, too high. Expect around $85 to $90 at the max per ton of capacity for these capacities likely to be acquired.
Rakesh, the other thing is the industry announcement of price hikes which came in, about 8 to 10 rupees per bag. Do you think that's sustainable? Because, the industry attempted price hikes in April, May as well, but major part of those hikes had to be reversed.
So this is just a matter of discipline and intent. At the moment, the largest player in the cement industry is not really too keen on taking price hikes. They are more looking to gain market share, push more volume, and take advantage of the little bit of transition which is happening in the other leader, which is Adani. So I think pricing is going to take a little bit of backseat, and that means that Q1 and Q2 results may not be that great. There'll be sporadic attempts to increase prices, but unlikely that they will stick in till the time
So
both these top two players settle down on their market share.
Would you say that, while we are expecting demand to rebound and that's going to trickle in only in the second half of the financial year, given the onset of monsoon already in, at least the southern and western parts of the country and perhaps all over the country in the next few weeks as well, 8 to 10% growth, you think, for second half of FY25? Would that be a fair estimate? Or do you think one would have to hunker down their expectations?
So after a weak April, which was kind of dominated because of elections, etc., May has been reasonably decent from cement demand point of view. We're expecting around 8% growth for the industry. So I think 8 to 9% growth for FY25 should not be a challenge. Obviously, cyclically, demand does go down in monsoon, but that happens every year. So you have to look at YOY comparison. So 8 to 9%, looks, easily possible. And more so since we have continuity of the government and of the ministers, etc. There's very little, hiccup in the plans which were being, unfolded before the elections.
Rakesh, there are another component for the cement industry, which is the raw material. And raw material includes largely coal and transportation. Coal prices have come down, transportation prices have been stable. If that is the overall raw material, what should I say, framework, can one assume that more than price hike, there could be a surge in profitability?
So, Nikunj, that has already played out in Q3 and Q4. Costs have gone down, and that is one of the reasons why companies were able to retain, decent profitability in Q4, despite cement prices going down. But that cycle has kind of played out, and I don't see too much of reduction in energy costs from here on. So that safety margin has actually already been consumed. So from here on, there will be a little bit of margin pressures only in Q1 and Q2.
Is there scope for big M&A in the cement sector, or this is something which we always talk about it, but it rarely happens?
Big M&A, meaning there are only 2, 3 big companies left, and none of them are, kind of in any kind of duress. So their expectation of valuation would be very high, even if they were looking to, kind of exit. So I think consolidation would be limited to smaller companies, at the max 7, 8, 10, 11 million ton capacities. So there are a few of them, as the media reports have been highlighting. So those are the ones which will be taken out first. I don't see a big bang, M&A happening.
So for those who are buying cement stocks with the assumption that this will be bought over by this group and that will be sold by that group, they should not buy small cap cement stocks or small or medium cement companies with the assumption that what happened in steel will happen in cement. You think that large companies and medium companies and small companies will coexist in the Indian cement sector?
So, see, if they are trading around below $85, $90, there's an opportunity that they might, if the M&A happens and they are taken out, there's some upside. So my, suggestion is that not to go overboard, expecting that these companies will be taken out at very high valuation. That's not going to happen. In terms of coexistence, in cement sector, the larger companies are growing much faster. So if you are sure that this smaller company is not going to be taken out, then it is better to stick with larger companies because they are growing better, they're gaining market share, they have pricing power. So those are the companies will do better in terms of stock prices also.
Rakesh, great to have you on the show. Thank you for putting the spotlight and giving us that analysis on how cement sector and of course stocks should be approached now.
Thank you.
Okay, we're going to take a